Hey man, what's going on, y'all? Man, I was trading today and I saw a specific level get reached in the market, and it's a level that we talk about a bunch of times, and I was taught it by my mentor, and over the years and over the months, over the years, I kind of developed a system for myself in which you can take a trade at this specific area, and I kind of wanted to talk about it today. I haven't done a video in a little bit, so and the area I'm talking about is the golden ratio. I think most people, they know what Fibonacci retracements are. You've seen it on the chart. Maybe you don't use it specifically. Maybe you don't apply it to your trading. But I know for me, I sometimes use it. I sometimes don't. I have my own system that I trade and I incorporate it. But if you specifically wanted to trade just this system, it's definitely there to do it. And I wanted to make a video about it. Again, I haven't made a video in a little bit. I just been locked in, concentrated, just focused on the craft and just trying to get to it. But MNQ gapped down last night because of the quote unquote World War III news that we heard about this weekend with the three nuclear bases that got hit in Iran. So I know a lot of people were thinking short. We're going to be heading to the downside in the market. Yes, the market did gap down, but we were bullish all day. We were bullish all day, and we came to one specific spot, and from there we just jumped out the gym. And if you look at oil gapped up and was just bled out all day. But again, I want to specifically talk about this one particular strategy that you can actually incorporate into your own trading system. And again, that's the golden ratio. That's the 61.8% retracement. That happens. It happens most days, but where I find that it's really effective and really useful is when the market has done a outsized move, where the market has made a move where it's maybe one or two standard deviations from its normal range. And I'm gonna pull up a chart just so y'all can see what I'm talking about with this golden ratio thing. So again, market gap down on the Sunday open. So I think the low of the day you can see here was 21,562. So again, market gap down 21,562, and you can see that at around. I'm gonna push this time. You know what I'm gonna do is I'm gonna hide a couple of things on here just to get it off the chart. I'm not sure what other people use, but I'm going to take off a couple of things, and I'll talk about it in a little bit. And then I'm also going to make my fibs auto scale, and the fibs tool has the high and the low day on it, so that's what we're going to do. So let me move this a couple. Okay, here we go. So at this point, we have our low. We have our low in here at 21,562, and then at let's see, the market at 4 a.m. made its high, and that high was 21,944. So I also have my prep chart over here, and it includes the range information. So at that time, at 4:15, the market from the Sunday open till 4:15 Monday morning, the market had moved 382 points. The 20-day ADR at that point, the 20-day ADR, including Friday's session, that was 340. So anything above 340 we're starting to move into standard deviations of the normal, right? So I'm gonna skip ahead. I'm not gonna skip ahead. What I've done is I have my prep chart, and you can see this blue shaded region I have on this chart. So what I do is the level gets printed out on my prep chart, and I do a highlighted shaded area on that chart. The shade, I have it set that it goes to all charts, and I'll show that right now as well. So if I go to properties, I clicked on that level, it's showing on all my charts. So if I go ahead and move it, I can move that level on another chart. You can see my mouse isn't even on the screen, it's on another screen. but I can move the level on another chart. So I'm placing it on the 20-day ADR high band, and you can see where it gives me, it signifies a level on the chart. So now I'm like, okay, at this point, the market has gone up to this point. We've already come to the 20-day ADR high, right? So now, and again, this is during the London session. I don't trade London session, but it's just something to note. So now what happens is, at that time, right? So now the market opens 9:30. We get a flush down, pop up. We make a new high. So at this point, we're going into standard deviations away from our 20-day average, right? So let's see. At this time, we have moved the market again. Low today, 21,562. High today, 22,018. So if I see at that price at 22,018, we've now moved 456 points, right? This is when golden ratio comes into play. At least that's from just what I've seen through just forward testing, back testing, and just looking at the market and seeing how it moves in specific areas and just the data I've collected. So again, low today, right here, high today, 22,018. From this level, from this high day, what I normally, and again, we can see it hindsight, but we've talked about this level so many times to a point where it's now we're just looking forward to it. Like, yes, we can see it in hindsight, but we can also look forward to this level. So I'm going to mark it off right now just so that we see it. Golden ratio retracement is in this area, right? And again, when the market does a 61.8% Fibonacci retracement, it's not always exact. So it's just in this area, 21,736. That area because it's not always exact science, but it's data, it's math. And the math tells a story, and it's typically on point. But again, the times when it's not on point, if you keep your risk intact, you should be straight. You should be good to go. So market comes from the high, and let's mark off something else before, just so we can see. Okay, market is coming from this low. Come from a low. Market makes a high. We are outside of the 20-day ADR. We're almost at a standard deviation from that range. Market comes down to, and let's go slow. Market, and we're on a 5-minute chart as well. Market comes down to the, let's see. Market comes down. Let's go ahead and move this over right here. Okay, market comes down to a 61.8% retracement from the high. So what I typically tell people, go for 1-to-1, right? There are times where it could come to this level, it pops up, gives you 30 points, 40 points, and then slams back down. The point was that there were points available. There were ticks and there was points available, right? But if you really want to get frisky, if you really want to go, because I know some people are, not that they're obsessed, but they try to follow a strict risk to reward ratio, right? So if the market breaks to the next Fibonacci level, that means that this golden ratio, this 61.8% trade could potentially have been false now. It's not true, okay? So say you were to enter at the 61, say you entered in this little pocket area, right? And you said, okay, you want to go for 1-to-1. Okay, so if you entered around this level and you put your stop at this, that's 330 something ticks. Okay, you got your 1-to-1. Your 1-to-1 was gotten, right? If you risked this much and you got that much, well, let's see. What if you wanted to go from here? What if you went? It's potential to. Oh, also let me shut some things off. See, that's fine. Y'all, I know y'all can see it. So again, market made a low. Market came to a high. We are outside of the 20-day ADR, and we're about a standard deviation away from that ADR level. We We drop back down into the golden ratio, right? Enter the trade. You put the stop wherever you want to put it. I would say the next fib is the trade is invalidated. Market runs up, and I mean, that's just crazy. Well, I guess it's not really crazy because we've seen it so many times and we call it out all the time. Golden ratio, golden ratio, golden ratio, golden ratio. It's spoken about so many times. It's spoken about so many times, and the market literally went to that golden ratio spot and never looked back. It literally never looked back, and it's even in the session we're in right now, it just never looked back. Like that, from this was the lowest spot it's made in the past 9 hours. And just ran, and that's where we are. So again, that's all I wanted to do. Quick video, talk about 61.8% retracement, and yeah, that's it, man. Let's go. Let's get it.